Well, welcome everybody. A very good evening to our Queensland guests and a warm morning to our panellists and UK-based guests. Thank you for joining us for today's webinar on e-commerce in the UK, the next session in our UK Market Access series. My name is Linda Apelt. I'm the Agent General for Queensland in the UK and Trade and Investment Commissioner for Europe. I'm absolutely delighted to be hosting you this morning from London, where our Trade and Investment Queensland European office is located. This is one of 16 international TIQ offices. Our role is to work closely with Queensland exporters to find business partners and opportunities in the UK and Europe to assist in connecting UK and Europe-based entities with investment opportunities in Queensland. Today, you have joined us for a second webinar of our UK Market Access series for Queensland exporters. The aim of our webinar series is to continue our efforts in providing market updates, business opportunities, and practical tips for Queensland exporters wanting to access the UK market. Queensland has a long and rich relationship with the UK. Despite the current travel restrictions, varying speeds of global economic recovery, and certain geopolitical challenges, there are reasons to remain optimistic about the UK market growth for Queensland exporters. E-commerce, of course, is no exception. The UK is the largest commerce marketplace in Europe. According to the British Business Bank, the first 2 weeks of April 2020 saw the UK's e-commerce sector up 83% year on year compared to 2019. And the coronavirus and government-imposed lockdown was undoubtedly a major factor. And of course, e-commerce appears to be here to stay. Whether it is physical or in this increasingly online world, the UK remains a great place to do business due to the similar business and legal frameworks, as well as natural cultural ties. These reasons, combined with the potential new Australia-United Kingdom Free Trade Agreement, will still make the UK a good springboard to Europe, the world's largest marketplace. We see good opportunities for informed exporters who take a strategic approach to win business in the region. It is also a good place for Queensland businesses to test their first international experience. Today's webinar will give you insights into the UK commerce marketplace. Our inspiring expert panel will give you practical tips and considerations on how best to do business here. We are proud to be delivering this event today in partnership with Linnworks, industry-leading SaaS commerce platform, and Oury Clark Accountants and Solicitors. If you would like to meet or speak directly with our valued partners, please reach out after the event and we will facilitate a connection. I'm very pleased now to introduce today's lineup of expert speakers. Firstly, we'll hear from Callum Campbell, CEO, Linnworks. Then we'll hear from Andrew Oury, partner, Oury Clark. This morning, you will hear brief presentations from Callum and Andrew, and then I'll facilitate a brief Q&A discussion, which is where you can join in and ask questions that you may have. However, if you have any questions during the presentation, please click on the chat icon on your control panel and type in your question. If they are for a particular speaker, please include this detail. I will bring the questions up if you have time for questions at the end of the presentations or during the Q&A. So it is now my great pleasure to hand over to our first presenter for today, Mr. Callum Campbell. Callum is CEO of Linnworks, an SaaS commerce platform. which empowers brands and retailers to grow their business. Linnworks works with the world's major marketplaces and sales channels, including Amazon, eBay, Alibaba, Shopify, BigCommerce, and Magento, to help businesses conduct commerce wherever their customers are. Linnworks' e-commerce platform helps online retailers automate key processes, reduce costs, and grow their business. Prior to joining Linnworks, Callum founded Autonative, an automotive software and services business that continues to be a key player in the automotive e-commerce industry today. We have invited Callum to share how businesses have adapted, practical tips to take forward, and why now is the time that you should be considering how to further adapt and expand cross-border. Over to you, Callum.
Thanks very much, Linda. Let me just see if I can share my screen here. So I'm going to put my slides. Okay, one moment. Okay, I think we're going. Cool. Hello, everybody. Good morning to you if you're in the UK, or good evening if you are in Australia. Look, I want to kick off with a quote from the historic US President John F. Kennedy. He famously said, "Change is the law of life, and those who only look to the past or the present are certain to miss the future." Change is the law of life, and those who only look to the past or the present are certain to miss the future. In recent months, we have witnessed a seismic shift in the tectonic plates of commerce, a shift like we've never seen before. We've watched the accelerated closing of high street stores. We've seen major brands and retailers on their knees because they lacked an online presence. And equally, we've seen an explosion of businesses from all backgrounds rush to reinvent themselves online. The shift has been seismic, and I believe it has set commerce on a new trajectory altogether. But amidst all the noise, all the volatility that we have been experiencing that has engulfed us in recent months, it is so important that those of us who are involved in running businesses can take a moment to step back and actually really take a look at what is going on. You know, as John F. Kennedy said, if we just look to the past or we just look at the present moment, we're going to miss the future. We need to step back. And therefore, brands and retailers must be thinking about the future. They're to thrive in this new world of commerce. And so what I want to do in the next 15 minutes or so is to do that, to step back together and to consider some of the macro trends that are driving the world of commerce globally, but also when you're thinking about the UK market, and they're actually shaping the UK market very specifically. So I believe these are trends that all brands and retailers must be thinking about if their business is to succeed moving forwards. They're absolute fundamentals, so they need to be considered seriously. So I'll run through these three trends, and then what I'll do is I'm going to give some examples of how different brands are responding to these trends, and then hopefully we can take some questions at the end, and it'll be a good and informative session. So the first trend that I want to highlight is this. It's the shift to direct-to-consumer commerce. Hopefully some of you are familiar with this language, but essentially the shift to direct-to-consumer commerce, we can understand this by looking and framing how things have historically been in the supply chain. So historically, what we've seen in the world of commerce is brands, think Adidas, taking product and selling it to a distributor or a retailer. So think maybe Sports Direct, if you're familiar with Sports Direct. And then the distributor or retailer sells that product onto the end consumer, either through their bricks and mortar store or through an online sales channel that's a first party channel. So like a website like Shopify or BigCommerce, or through a third party online channel like an Amazon and an eBay, a Walmart, a Catch, etc. So this has been the historic model, brand to retailer via different distribution channel to the end consumer. What we're seeing in in mass force at the moment is that brands are now beginning to sell direct to the end consumer. They're basically bypassing their traditional retail network. And this is increasingly evident in the most mature e-commerce markets. The UK is the third most mature market globally for e-commerce in terms of market penetration of online shopping. So we're seeing a lot of this in the UK, and it's really important to consider. But essentially what we're seeing is brands deciding that actually we don't need now, in the age of the internet, to sell to a retailer for them to distribute product for us. We can just use these new internet technologies and engage directly with the end consumer. So why are brands doing this? Well, the first reason that they're doing this is because there's more margin available in the sale for the brand. If the brand can bypass that retail network in the middle, then it can take back some of the margin that the retail network has been winning and ultimately drive more profitability out of each sale. So it's attractive to the brand to do this economically, but secondly, and I'd argue more importantly, by doing this, the brand is able to build a direct relationship with the end consumer. They're able to gather insights through data, from these digital platforms on the end consumer and understand the end consumer better. And of course, it naturally follows, if you're a brand who has stronger margins, better understanding of the end consumer, then of course you're going to have a competitive advantage in the market. And so the result of that is that more and more brands are compelled to go direct to consumer, as they're looking at their competitors who are going direct to consumer and recognizing they've got more margin, better customer understanding, which they can feed back into their business to build better product, better marketing. Then of course, more brands are recognizing they too need to go direct to consumer. And so there's this snowballing, this compounding effect of more brands wanting to go direct to consumer. And the result is that space in the middle, the distributor retailer, is being squeezed. And we're seeing that very clearly here in the UK at the moment, where a lot of the traditional big box retailers, a number of them have just gone out of business in recent weeks, are coming under huge pressure. So, in one sense, it's not the prettiest story, but it is a very clear trend that's driving the market. And I think the decision that distributors and retailers need to be making in this context is, well, where do they play in the new world? Do they shift left and reinvent themselves to develop their own branded lines of product and sell those direct to consumer? Or do they shift right and actually establish more like a third-party marketplace style environment online? So we've seen this in the US, platforms like Walmart operating like a marketplace, Best Buy, Target, Urban Outfitters in the UK, lots of others, retailers that are reinventing themselves, developing an online platform through which other brands can sell to the end consumer. So what we're seeing is that space in the middle being squeezed and retailers shifting left or right to be able to thrive in the new world. So that's the first major trend, the shift to direct-to-consumer commerce. The second one that I want to highlight is the strengthening of marketplaces. The strengthening of marketplaces. What we are seeing is that marketplaces are winning, and they are winning big. So when I refer to a marketplace specifically, what I'm referring to is an online platform through which third parties can sell goods and services. So when it comes to e-commerce, we're thinking naturally the likes of Amazon and eBay and Walmart, etc. So what we're seeing in the market globally is that marketplaces are capturing over 50% of online sales volumes. They're very significant in the landscape. And if we want to understand why they're so significant, why they're capturing so much of the market share, it's ultimately because of the nature of their business model. What we need to understand about marketplaces and their success is that they are experts at driving consumer engagement. These platforms, they don't hold inventory and stock themselves. They fundamentally operate a marketing platform. So, for consumers, what they do is they drive traffic to their platform and they connect the demand from the traffic with supply from retailers. And they basically operate a highly efficient model, data-driven model, where they can create very compelling experiences for consumers on their platforms and keep consumers coming back to shop on their platforms. The experience is compelling. And if you imagine being a consumer and you've got the option of shopping on a website or on a marketplace, well, on a marketplace, you are massively empowered when you're shopping. You have such visibility in terms of range of product, depth of product, price of product, shipping services. There's often so much range and choice that when a consumer is on a marketplace, they're empowered. The experience for them is so compelling. It's hard for a website or an in-store shopping experience to match the marketplace experience. So the experience in a marketplace is compelling, but then it's also compounding, because as more consumers shop marketplaces, then the marketplace drives better understanding of the consumer, and it can meet that understanding by attracting more merchants to the platform. And those merchants basically provide the supply to the marketplace to meet the demand. And the result of that is that the marketplace is able to use data to remarket the consumer, drive more consumers back into the top of their funnel, back onto the platform, to drive more sales, which in turn allows the marketplace to drive more supply on the other side. So there's this compounding effect on from marketplaces inherently in their business model. So the experience is compelling, but it's also compounding, and the result is that marketplaces are capturing over 50% of market share, and we expect that to grow. What we're also seeing is there is an increasing number of marketplaces emerging. It's not just about Amazon or just about eBay. That's historically been the case, but increasingly we're seeing more and more specialist platforms come out as marketplaces and serve different segments of the market really effectively with this model. So marketplaces are winning big, and they need to be considered and taken seriously. And if we look at the UK, I won't say too much about the UK market, but the types of marketplaces that are significant here. So I mentioned of Amazon and eBay. I'm sure most of us are familiar with those, but there's others. There's Frugo, there's OnBuy, Wayfair is very big here, a category specific marketplace, as is Etsy, not on the high street, another. So the significant growth in a lot of these category specific marketplaces, and they represent key channels for brands and retailers to reach consumers. As these platforms drive more and more consumer engagement, the key channels, brands and retailers need to figure out their strategy of how they work with these platforms to engage the end consumer. Just a brief comment around the UK commerce market. I sort of mentioned at the start that it is one of the most mature markets for e-commerce in the world. So really, if we want to understand why that is, a big driver of that has been the physical size of the UK. Because we are ultimately a relatively small island, it's been a great testing ground for new technologies. Really, it supports testing around logistics in terms of shipping, not being as challenging as a place, say, like North America in the States or Australia. Market penetration has been high here. Our business, Linnworks, we tested, and launched globally with Amazon Shipping, like their new shipping services in the UK. Again, evidence of the fact that major players are using the UK market as a key testing ground to develop the e-commerce strategy, major technology players in particular. So definitely needs to be looked at and presents a great opportunity. So first trend, the shift to direct-to-consumer commerce. Second trend, the strengthening of marketplaces. And then the third one that I want to highlight is the rise of the effortless economy. Now, we could talk for a long time on this. I won't say too much, but essentially, I wanted to take a look at this trend and really what this graph points us towards. So this graph kind of gives us a high level overview of how commerce has evolved over the last 40 years or so. So there was once a time where you and I, if we wanted to buy products, we had to leave our homes, go down the street to a store to buy products. That was a high effort endeavor. That was completely revolutionized with the introduction of internet technologies, the introduction of online shopping. Suddenly, we didn't need to leave our homes to buy a product anymore. We could actually engage in a high convenience experience, and we could shop from home on websites. We could move around lots of different websites and buy different products that we wanted. They'd be shipped to our houses. That has then evolved further into this idea of singular convenience, the idea that commerce was not happening on just lots of different websites, but was happening in one location on platforms that are marketplaces. The idea of the everything store, that you can shop everything in one location. You don't even need to go to lots of different websites anymore. It becomes that effortless that you could just shop everything from one online location. And the continuation of this trajectory, I believe, is evident in some of the more recent activity that we're seeing around large digital platforms becoming commerce enabled. We're moving towards a world of effortless consumption. So if we look back at this past year, we've seen platforms like Facebook and Instagram and Google and Pinterest and YouTube and BuzzFeed, and the list goes on. They're all becoming commerce enabled. What we're seeing is a continuation of this trajectory of consumers expecting effortless commerce, the idea that commerce will happen wherever we as consumers are spending our time online. Wherever we're shopping, wherever we're being entertained, wherever we're socializing, these environments are beginning to understand us well and are becoming commerce enabled, and they're serving up product to us when they recognize points of buying intent. So what we're seeing in this graph ultimately is that effort for consumers is reducing and reducing, and this is being accelerated with the introduction of internet technologies. But that creates challenges for brands and retailers alike. There's lots of questions to ask in this context. So the first question is, of course, well, where is my revenue opportunity? If consumers aren't just coming to my website anymore or going to my store, where are they spending their time? And if we can understand where they're spending their time, then we can understand where our revenue opportunities are going to be now and in future. So, we look at this slide, we can see, over at the generalist marketplaces, over 16 billion visits per month. That's where a lot of the traffic is going at the moment. The Amazons, the eBays, the Walmarts. We're increasingly seeing more traffic going to the specialist marketplaces, challenging the big generalist platforms. So I mentioned Wayfair and Etsy earlier, Zalando's another, but these are category specific marketplaces. They don't just sell everything, but they sell within a certain category. So Zalando in fashion is creating a marketplace environment that is specialized around fashion. It creates a brilliant buying experience if you're wanting to buy clothing online, but with the benefits of a marketplace. So these platforms are merging, they're gathering momentum, they're capturing more and more of the traffic. But again, we're seeing traffic on social. So we're seeing social commerce and the growth of social commerce. And in future, I believe we'll see new channels emerge. So for example, T-commerce, the idea that within the environments we travel, so within transportation, so cars and planes and trains, commerce will be enabled. You just imagine getting in an Uber taxi, heading over to a friend's house one Saturday evening. You are a captive audience in that vehicle. And what I believe will eventually happen, and this is a few years down the line for sure, but what will eventually happen is, as a captive audience, that vehicle, which is effectively a platform, will suggest product that you might want to buy. So you're heading to your friend's house, it might recommend a bottle of wine that you can pick up in a store en route. So there's that understanding of the consumer. So more and more channels are becoming commerce enabled, and that's creating challenges for brands and retailers alike. It's creating twofold challenge. The first element of the challenge is really around this is, well, if you're a brand or a retailer and consumers expect you to make your products available to them wherever they're choosing to shop, then how do you access and sell in all of these different commerce environments simultaneously? How do you do that and make sure that you're successful selling in all of these different environments? How do you move from doing partial commerce, or you may be just selling on your website or just on marketplaces or just in your store, to total commerce, where your products are available wherever your customers, not the entire market, but your customers are spending their time and shopping? And the challenge here is that brands that don't stay fully connected with their customers will struggle to grow. They'll naturally become disconnected and they'll increasingly become irrelevant. So how do you access all of these different channels simultaneously? And then secondly, once you're in all of these channels, how do you connect all of your commerce operations such that they are connected, orchestrated, and automated so that you are in control of your business? Because as you can imagine, selling in lots of different channels at one time, adopting the different back-end technologies that you need to support those channels becomes hugely complex. You need to be able to bring central control to that process so that you can continue to move forward quickly and thrive as a brand or a retailer. So those are the three trends that I wanted to highlight. The shift to direct-to-consumer commerce, the strengthening of marketplaces, and then the rise of the effortless economy. Brief comment, what's COVID done to these three things? Well, really, it's not changed the direction, it's just changed the trajectory. These trends were at play before the COVID crisis. COVID's come in and it's obviously created this increased sense of urgency for brands and retailers to act on these trends. So, in our business, what we're seeing is more brands and retailers coming to us and recognizing they need to figure out how to operate in a direct consumer world. More and more brands and manufacturers definitely coming to us and saying, how do we get online? We're seeing more and more brands and retailers engage marketplaces and figure out their strategy. And we're seeing more and more brands and retailers recognize that the effortless economy is on the rise. They need to be operationally equipped to thrive in that context. So I'm going to look then briefly in response to these three trends, three very quick examples, conscious of time here. But the first one is around the shift to direct to consumer. So if you do want to be in e-commerce and selling goods online, then step number one really to thrive in this world is all around doubling down on brand. It's doubling down on brand. In a world of direct to consumer, brand becomes your point of differentiation. It becomes your defensible position in the market. It becomes the asset that really drives value in your business. You can't be, you may be imitated, but you can't be replicated. You can hold your position in the market when you own and sell your own branded line of product. So I give the example here of a customer of ours called Public Desire. They're a fashion brand based out of Manchester in the UK. They've amassed over 1.4 million followers on Instagram, and they've done really well across lots of different social channels in terms of building their direct relationships with the end consumer. But ultimately, Public Desire is an interesting story because they were once a retailer. They were reselling women's fashion and footwear online, but they made the shift to develop their own direct consumer brand. They invested in their community, they invested in their brand, and they invested in the different channels that they could take that brand to market through. And so they've made a brilliant step here, doubled down on brand, and it's evident in the performance of their business. We've seen it through this past kind of year, despite the fact being in fashion, which is one of the categories that was more challenged through the crisis. They've done really well. They've doubled down on brand. They've made sure that brand sits at the core of their business, that they own their own branded line of product that they're selling. So that's step number one in response to the shift to direct to consumer commerce. Step number two in response to the strengthening of marketplaces is to define your marketplace strategy. We can see that in the UK, but also globally, marketplaces are capturing so much of the consumer traffic that they need to be taken seriously. They can't just be written off. If you want to stay connected with your customers, you need to figure out your marketplace strategy. And that's exactly what Nike have done. You may have heard the news last year of Nike parting ways with Amazon and saying that they were no longer going to sell on Amazon. And this turned a lot of heads in the industry. A number of folks sort of were saying, look, is this the beginning of the end for the marketplace? Is this the kind of beginning of the end, of that whole trend? But actually, I think this really represented the end of the beginning. It represented the end of the first phase of e-commerce, where actually Nike were saying, no, we recognize marketplace is important. Therefore, we need to have a very clear marketplace strategy that aligns with our core business strategy. And so although they stopped selling on Amazon, they've started selling on other platforms like Zalando, I mentioned earlier, Tmall, Alibaba, and a whole host of others. And they're engaging other marketplace channels as part of their direct consumer strategy. And so Nike have set out a framework to decide which channels they're going to sell through. And they set out these 4 principles. These aren't necessarily the right principles for every business, but what's important here is that Nike have defined a really clear framework of how they are going to engage with marketplaces because they recognize their importance. What we often see in our business is many brands and retailers, they want to sell on marketplaces, but they don't really have a clear and coherent strategy around how or why they're selling on marketplaces. And the result is that those channels underperform. So what Nike set out in their 4 principles is, firstly, they want to make sure that if they sell through a marketplace, it is a growing channel. They want to ensure that if they invest resource now into that channel, that they're confident that in future it will be larger, that channel will be driving more traffic, so it can drive more sales for Nike. Secondly, they're looking for net new growth, not cannibalization of existing sales. So Nike aren't looking to set up on a new marketplace selling channel with a view just to move sales from one environment to another. No, they want to add net new sales growth. So that's key for them in selecting a new channel. Thirdly, they only want to sell on platforms that elevate the consumer experience. We know how seriously Nike take their brand and the consumer's experience of the Nike brand. So of course, it can be expected that Nike had set this into their framework. They only wanted to sell in environments that would elevate the consumer experience, and they didn't believe Amazon would do that for them. And then fourthly, they wanted to ensure that the platform, that the marketplace could guarantee source of authentic Nike product. So that was Nike's framework, but really the principle here is that they defined their marketplace strategy, and every brand and retailer should be thinking about how do we engage with marketplaces in a way that allows us to capture that opportunity, continue to build our brand, but not miss out on the way that we can connect with our consumers through these online channels. So then thirdly and finally is in the context of the rise of the effortless economy, it's all around building total commerce control, i.e. establishing the core software capability, the platform at the center of your organization that allows you to sell to your customers wherever they are choosing to shop, because that's what they expect increasingly in the new world. That is what they expect. They want to shop on their terms. So a platform that allows you to sell in all these different environments simultaneously, and also to connect and integrate all of your commerce operations such that you can grow effectively by staying connected with your customers, that you can automate your processes. You know, it can become really expensive if you're trying to run lots of different channels, to do a lot of that manually or to do it in a really disjointed way. So you can automate process to drive down your cost base, improve your margins, and ultimately stay in control of your business by gathering data from what's going on across your entire ecosystem around your business, across all of your selling channels, but also across the operational channels in your business, like your accounting systems, your warehouse management systems, your shipping services, etc. And so this is actually what we do at Linnworks. This is my sort of semi-sales pitch, although I won't push it too hard, but this is what we do, is we bring total commerce control to the center of an organization, so that that organization can sell to its customers and connect its commerce operations, allowing it to grow, automate, and be in control. So this is actually a small quote I have on the bottom left here. This is from a guy called Richard Goss, who is co-founder of a company called Rinkit. They're a Linnworks customer. They actually have a business out in Australia. Richard is in Australia right now. I don't know if you're on the line, Richard, but if you are, yeah, hope you're enjoying this and hope you're enjoying being featured. But again, this is part of Rinkit's story, and how when they took this move to bring commerce control centrally into their organization, to establish this platform, they've seen 10x growth as a result, because it's just allowed them to move so much quicker and meet their customers wherever they're choosing to shop and to grow their brand. So just to summarize, what we're seeing, the shift to direct consumer, the strengthening of marketplaces, and the rise of the effortless economy. 3 macro trends that all brands and retailers need to be thinking about, whether they're selling globally, but also whether they're considering the UK market and how they engage with UK consumers. Thanks very much.
Well, thank you very much, Callum. Thank you for providing such a high level of transparency around what we're all seeing around us as 3 mega trends. And of course, that base precept of J.F. Kennedy, change is the law of life. So thank you very much. That was fantastic. It's now my pleasure to introduce Andrew Oury of Oury Clark. Andrew actually joined our first event, and we have invited him back to discuss some of the key considerations exporters need to make when doing international business, and some of the important impacts of accounting, tax, and also the legal requirements. Oury Clark are leading chartered accountants, lawyers, solicitors, consultants, recruitment, and financial advisors based in London and Slough, offering a breadth of services to both large and small companies, as well as to individuals. They have supported a wide range of Queensland businesses to enter the UK market, and we're very pleased to be partnering with them this morning. Andrew Oury is partner at Oury Clark. He specialises in assisting Australian businesses expand and grow in the UK. He has a wide range of clients, from startups to large listed entities in industries such as media, technology, retail, lifestyle, and engineering space. Welcome back, Andrew.
Thanks for an introduction. Okay, I'm really just going to talk about e-commerce, I guess, and how it works. Unfortunately, we have to talk about Brexit a little bit. This is a really big subject, but I'm going to just try and give you, I guess, what you need to do if you are an e-commerce business and you want to sell stuff in the UK and Europe, because it's still kind of the same thing. So, as everyone knows, UK, largest e-commerce market, or I should say in the world, in Europe, that is, huge market, massive adoption. Brexit, it is happening. I'm sorry about that. Actually, if you're an advisor, its impacts are much less far-ranging than people think. You know, we have contracts with France, contracts with Germany. We don't have a contract with Europe. So a lot of all the infrastructure remains, but big change. We're not going to be in the single market anymore, the customs union. So a lot of clients and a lot of Australian businesses certainly have used the UK as their hub. To some extent, they still can. There's sort of good news and bad news, but I'll explain. So let's just do the basics. Europe is a bit like the United States, I guess. You know, you have to pick a port of entry, get the goods into that country, and then you can move the goods around. Different countries have different rules about what you could do. You know, how you register, whether you need fiscal VAT representation, which is effectively a legally responsible person in that local country. The UK has probably one of the most chilled, you know, VAT and rules. You know, one of the reasons people probably use it, you know, as opposed to most of the other countries, which are a little bit tricky. And since the Channel Tunnel, the UK became this, you know, really good place to bring goods in. UK companies are amazing. I don't even want to boast, like they really are. You know, I mean, I think probably Aussie and Kiwi companies may be similar. It all comes from a similar theory. Although, I mean, Aussie companies, you can shoot directors and stuff. You can't do that in the UK. So you get an incredibly strong, robust company and you can form it in hours. And UK law is very handy. No requirement for fiscal VAT representatives in the UK. So that means when you know, you can register for VAT in the UK with an Australian company, and you don't need anyone legally responsible for the liability like you do in almost every other European country. So pretty good. So what's the problem with e-commerce and the customs union? The problem with the single market is it basically, if you're doing B2C, which if we're talking about e-commerce, probably you are, so goods sold business to consumer, it is really not that much of a single market in many ways. And there's a zero limit. So, you know, if an Australian company sells £1 of goods in any European country, you're actually breaking the law and you need to register for VAT in that country. Lots of people don't really understand this, and it's sort of, you can sort of get away with it in some countries and not in others. Effectively, as I say, it's a port of entry. You've got to bring your goods in and then you can move them around. So that's the sort of the basics of the past. Okay. Now, what they have is the concept of distance selling thresholds. I need to explain all this, unfortunately, because it's all kind of linked to the same question, which is, you know, I want to sell in the UK. You know, I probably want to sell, you know, I may want to sell a good into Europe. You know, I may have one or two customers. Well, they have the concept of the distance selling threshold. So if I register for VAT in one country in Europe, I can sell up to a limit in those other countries. Okay, that's good-ish. But if you breach those limits, you then have to register locally there. You know, effectively, e-commerce companies, you know, as we know, have exploded as a thing, and these rules were set up like everything else before the concept of them. So this whole thing is need fixing anyway. So what's going on? So, okay, Brexit, we're off, you know, and what does that now mean? You know, the UK is the largest market for e-commerce, probably the logical market for you. So how do you do both, you know? Well, let's, before we do that, let's just tick off something else, because we could be talking about goods or we could be talking about e-services. So if you're providing any e-services, it's hopefully a bit easier. If you're doing B2B e-services, there is no change. You don't need to change anything. You can supply as much services as you want to the UK or to Europe, provided you don't have anything set up there. You do it all digitally from your website. You don't have any people or companies or anything set up in Europe, then you can supply away as you wish. If you're doing B2C, then there is this scheme that the UK was in called the MOS, which is basically for digital services, one-stop shop. If you've got one registered in the UK, unfortunately, you can't use that anymore. So you will now need to register locally in the UK to provide B2C e-services. Now, there is a scheme, a non-union, it's so technical, all this stuff, but effectively, if you're selling B2C e-services, you can have a UK VAT registration, and then you can do a non-union scheme registration for EU MOS. So that means basically in the UK, you can register for this scheme to mean that you can now supply e-services again across Europe under a non-union EU MOS scheme. So I'm explaining that badly. So you've got to register in the UK, and then you can register somewhere in Europe and register for this scheme. So that you can still supply across Europe. I mean, the general theme that you'll keep getting here is that you've got to register in the UK and you've got to register in Europe. So what is the ideal setup? If you're an Australian company and you're selling goods, or to some extent services, you know, what should I do? The UK is still by far, and I mean by far, the easiest place to form a company, you know, or register for these things. We've got the lowest tax and stuff. I've tried registering companies in other countries. If you're aware of the concept of Napoleonic law and notarization and things like this, you know, if you want to form a company in Holland, everyone's got to fly in. It will take you months. And that's pretty much the case everywhere except Ireland. But Ireland still requires wet signatures. It still requires an EU representative. You know, the UK doesn't require anyone who's in Britain or in Europe. You know, no directors required in the UK. You can have a company in a couple of hours. It really is the easiest place to go and sort of set up in the UK and with a night in Europe anyway, regardless of Brexit. So, and with a 19% tax on profits, you can actually save quite a lot of tax. If you're selling into these countries, if you're selling into the UK, you can, you know, effectively lower the rate of tax that you're effectively paying. Rather than paying tax in Australia, you pay some in the UK. Yeah, as I say, this is a giant subject, so I'm trying to keep it focused. You know, in order to do that, so you can register a company in the UK. What can't you do? Well, you've got to make sure if you're doing this, you've got to manage that company in the UK. And that means have board meetings in the UK once COVID's not around anymore. You can't put salespeople or management people around Europe. You know, the other thing that's going on is people are sort of hiring salespeople and dotting them around Europe. You've got to understand that as an e-commerce business, you're creating permanent establishments. You're creating taxable presence across Europe when you do that. So if you're going to do that, you want to pick a country. I strongly suggest the UK, form a company and put that individual in that company. And therefore you will now solve this sort of issue that you're creating a taxable presence, because you've created this taxable presence by having a salesperson and you've wrapped a company around them. So you've effectively meant that it's all sort of neat and tidy in a little box and you're going to pay a low tax rate. If you're sort of selling e-commerce into the UK and then you happen to say, oh, I've got this girl in Italy who's going to do my sales, not a great plan. You know, you're creating a taxable presence in Italy and you're selling in various countries. And because of what's gone on with COVID and because of how much revenue all the governments are now going to lose because of remote working, this is really a really hot issue that's going to keep coming at us. You know, you just don't think you can hire particularly salespeople or management teams or open an office address in a country and avoid the fact that that local country is going to start trying to tax your business, which you really don't want to do, as I say, unless you control it, sort of wrap a company around it. You can have a warehouse wherever you want, and you can have people doing preparatory or auxiliary nature. So you can sort of have a customer services person maybe, and that wouldn't necessarily trigger this issue. So effectively, you need to get registered in the UK and in Europe if you want to sell there as well. If you register for VAT in the UK, great, you can bring goods into the UK, you can sell them in the UK. If you want to register them, if you want to then sell them in Europe, you need to register for VAT in Europe. you can use your UK company still to register VAT in Europe. And effectively what you've got to sort of conceptually think is, okay, I'm going to ship goods to the UK, and then I'm going to ship goods into Europe, and I'm going to hold them in those two locations. Because if I register in Europe, so I pick a country in Europe, like Netherlands is the most popular, and I can import goods into the Netherlands using my UK company. So it's the UK company with a VAT registration in the Netherlands. You can import goods and hold them in the Netherlands and sell them across Europe. Netherlands is very popular. It's, you know, got nice, easy VAT rules. You know, there's some great things about the Netherlands VAT rules, but you definitely don't try and form a company there. And, you know, it has some other stuff which is a little less helpful, like, you know, maybe employing people there, and employment law is a little less helpful. So the ideal setup that I'm seeing is people use a UK company, get a UK VAT registration, and then add to that a VAT registration in Europe. Where in Europe? Well, you've got to think of Europe as a coastline. So, you know, along here is how you get into Europe. And the most popular places are the Netherlands, Hamburg in Germany, Belgium. I wouldn't recommend France. No one ever really does. You could consider Portugal. Now, this is slightly dependent on where your customers are. You know, if all your customers are down here, well, maybe you should look at having a registration in the UK and then something down here so you can bring the goods in at a logistics cost, which makes sense. Yeah, so I hope this is making some sense, because it's a pretty confusing subject and I'm going fairly quickly. So once you have a VAT registration in Europe, okay, from this date, what's going to happen is from the 1st of January, the UK has no access to these distance selling thresholds. So you cannot hold goods in the UK and sell £1 in any country in Europe unless you have a VAT registration in Europe and you bring the goods through that place. You can't get a registration in Germany and then ship straight to Portugal. You've got to ship it into Germany, clear the goods, and then bring it down to Portugal if that's what you wanted to do. The good news is that Europe's doing what it was meant to do 20 years ago, and I think they're doing it just to wind up the Brits probably about Brexit, but they're finally introducing what's called the one-stop shop. So that means that you can get one registration in Europe, and this is not at the 1st of January, this is from July next year, and it may get delayed again. So if you follow me, if you want to ship to the UK and you want to sell anyone in the UK, and you also want to sell or have customers in Europe, get a UK company, get a UK VAT registration, then get a registration along the coast in a place that makes sense. Generally, you'll probably pick Germany or the Netherlands. You register there. You can now ship China to the Netherlands, China to the UK. Then from July next year, you can turn that registration in the Netherlands or Germany or wherever it is you've registered into what's called a one-stop shop registration. And that will mean finally you can do what you should have been able to do a long, long time ago, which is that I could import into Europe and I can sell as much as I want to any country in Europe, and I charge local VAT rates all across Europe. Now that's good news, basically. You know, that means that you can get yourself in a position to have this whole market at your feet. You know, the trickier bits are sort of how your software is going to keep account for it and things like this. But, you know, this is not for B2B suppliers. This is B2C goods and services. You can have a single registration in Europe and a single registration in the UK, but not until the 1st of July, 2021. All the concept of distance selling thresholds are being withdrawn. There will be this de minimis 10,000 euros per annum. So if I've got a registration in Germany and I ship China to Germany, or Australia to Germany, or wherever the goods are coming from, I can sell a minimal amount to other European countries, the 10,000 euros. Or I can register for a one-stop shop and I can sell as much as I want. Another really important thing is Oury's, which is a bit like my surname, slightly unpronounceable. If you're already selling, you should have an Oury number, which would cover the UK and Europe. Obviously, after Brexit, that doesn't work anymore. You're going to need 2 Oury numbers. You're going to need, you basically, you get an Oury number once you VAT register. They convert it into an Oury number. It's the sort of code that you need to use to bring goods into the country. So the UK now has an Oury number and Europe has an Oury number. If you want to move goods out of Europe or into Europe, you need a European or Oury number. If you want to move goods out of the UK or into the UK, you need a UK Oury number. So same thing, you know, you need a UK VAT registration, you need a European VAT registration, you need a UK Oury number, you need an EU Oury number. I hope that's making sense. So more changes. This is changes. We know more about, Britain has been a lot clearer about what it's doing on all of this stuff. So I can give you some clarity on what the UK is doing. We have no idea, you know, what Europe is doing or whether there will be a trade deal. And to be honest, Europe's been much more asleep about these issues. They've been kind of ignoring them. And there's an awful lot of European companies that have suddenly woken up that they need to come and register in the UK now. You know, they've kind of been ignoring it and stuff. But one thing we also know, so the UK is introducing the new marketplace rules. So, you know, similar to Callum's talk, we just had a lot of these marketplaces will now qualify as marketplaces. This is good news because it may mean that you can sell Australia to these marketplaces without having to worry about all that stuff I just told you, because effectively, you know, they're going to facilitate the sale. You know, you will sell to them zero rated to the marketplace, and the marketplace will take care of a lot of the VAT, you know. So there's two big movements going on. Europe's introducing the one-stop shop, and then there's also this move into this sort of looking at these marketplaces and looking a bit more closely about how they operate. I mean, what's going on with the marketplaces is a lot of them are going to try and move away from having all these VAT duties, because some of them don't want all these VAT duties and some of them are happy to do them. But, you know, if you're going to sell through a marketplace, you've got to get clear whether they're the person selling the goods and responsible for the VAT or you are. I mean, it says here, if it just does, if it just does advertising, you know, redirecting to the seller's website and things like that, then that's your problem. But if they're facilitating the sale, then it's their problem. So that's a big change that occurs from the 1st of January in the UK. You know, all these things are sort of clear in the UK. Digital. So everything's going super digital. And this is sort of massive what's going on. E-invoicing is the concept that invoices that you raise in your accounting system will be certified by the government effectively, automatically. It's already been introduced in Italy and they're rolling it out in France. Now, the UK is very, very good at collecting taxes. It's one of the best collector of taxes in the world. You know, we don't actually have the highest rate of tax, but we're so good at collecting them. And we don't really have a big problem with our VAT like Italy do and France do, where they have what's called the VAT gap. They have this sort of big amount of VAT that's not being collected. But what's happening is, and I can't see this happening for a long time in the UK, is every time you raise an invoice, a little widget will now ascertain whether this invoice is valid, whether the VAT amount's right, whether you can use this invoice, and you'll get a little green tick. This has already been going on in sort of some big businesses, and the NHS does do some of this. It's also about the fact that when you invoice someone, it will automatically go into their accounting system. So, okay, so you start expanding this a little bit further about what's going on. What's going on is that, you know, this is sort of a bit Big Brother. You know, the government's going to have an immediate knowledge of all of the supplies and purchases going on. You know, there will be sort of no room for error, you know, and what's eventually going to happen, and there won't be any VAT returns anymore. And this is happening quite quickly. So, you know, over the sort of next 5 years, you're going to see this happen where your accounting system has got to be capable of doing this. It's got to, you know, get it verified if that country requires it. As I say, I don't see the UK doing that for a long time. But then also no more VAT returns. It's all just sort of immediately happening. Well, it's sort of good and sort of bad. It is definitely a bit Big Brother-y, you know, it's a bit sort of, yeah, it doesn't put some businesses in quite a tricky place. But for an e-commerce business, it's probably mostly good because it's, you know, so many millions of transactions and you just want it all to happen. There is already a requirement in the UK that your software must be directly linked and put the VAT return into the government system. You'll probably be aware of that. It's called Making Tax Digital, or Making Tax Difficult, as some people joke. Most of these accounting systems, Xero, QuickBooks, most of them are compliant with this. So the UK is actually miles ahead of other people in Europe in terms of the API that the government has, the digitalization of what's going on. The other problem you're going to run into, and you may already, is these platforms, Magenta, Shopify, all of them out there, their ability to charge different VAT rates across Europe, or in the UK. All of these things have become more and more complicated for the software, and they're not very good at it at the moment. I mean, they're having to play catch up, I think, but I do hear a lot of clients complaining, just sort of trying to have an accounting system which can cope with shipping to all of these places and do all the invoicing correctly is very hard. I mean, I do raise in the UK, there's an allowance, which is if the goods are worth less than £250, you don't have to provide a full detailed VAT invoice unless the customer requests it. There's a link there if you want to see the guidelines on VAT invoicing. But getting your invoicing right is a minefield, and you can see if you layer on top of it the requirement for e-invoicing, there's a hell of a lot of complication coming together here, being driven by some governments' need to close this VAT gap and want to sort of have a closer eye on it, but making it more and more difficult to get your invoicing and software right. And you could end up in situations where you're struggling to be able to, invoice and ship. The other issues that come up a lot are you're an e-commerce business, you're sitting in Australia, you're trying to sell in the UK, but you can't get your payment gateways and your merchant facilities, or you can't get your bank account sorted out. Thankfully, because London's become such a leader in fintech, there's been this explosion in the fintech revolution, and the traditional banks, which have really struggled with the compliance and the legislation and sort of lost their way, trying to support small businesses, means that there are suppliers out there now who will do things. I know a merchant facility, for instance, that doesn't require your UK to have UK company to have anyone in the UK or to have UK directors, and are happy to verify Australian directors and give you a merchant facility for your UK business. So that's very helpful. And there are some players now getting their head around the risk that, they're happy to take a more holistic view on, are they happy to ID someone in Australia and be comfortable with the risk of operating with them and give them a UK merchant facility. So I would just say to you, you've got to look around and you've got to be open-minded to the new players on the market. What else is going on? Well, labeling depends on your industry, whether you require to have an address on products. Food, cosmetics, children's toys, various things require you under EU directives, which have been carried over into UK law, to have an address on your products within the EU. Well, obviously, I hate it, but we've got to talk about it all the time. Brexit, you're going to need two addresses. You're going to need an address for the UK and you're going to need an address for Europe. That doesn't mean two companies. That means an address. Most of this law, when you look it up, says it can be a natural person. As a client's done the other day, he's got a daughter living in the Netherlands, so she's now the address. You can set up, there's quite a few ways to skin this cat, and it depends exactly on the legislation that applies to you. Now, a lot of products don't require this, but as I say, some do. The obvious ones, the sort of the ones that are a bit more high risk, stuff you put on your skin, stuff you eat, you need this address. So that's to consider. Do you need two addresses, or what's your address in the UK? As I say, again, having a UK company is going to give you a UK address, a UK registered office. So you can certainly solve the UK aspect very quickly and easily. You've then got to consider, well, do I need an address in Europe? If you're forced to, you might get an Irish company, even though you might not even sell there much, just to have an address in Europe for your products, and because Ireland is the next easiest place to open a company. Other good news, From the 1st of January, you will no longer pay VAT when you import into the UK anymore. It will be disclosed for your VAT returns. So this is a cash flow advantage they're bringing in to try and sort of counter some of the negative impact of Brexit. The UK is also introducing the £135 threshold for low value goods. It means if you sell a product which is less than £135, you don't pay VAT on the import. You only pay it when you sell it to the customer. So it ships all the way into the UK and then you sell it to the customer, and at that last mile you charge them VAT, and that's all you disclose to the authorities. Whereas the old way and the way for most countries is you import it, you get charged VAT, you claim that back, and then you sell it to the customer and you charge them VAT, and you hand that over. It's a very circular and rather inefficient system. So there is the £135 threshold. Whatever you do though, you've got to be registered for VAT. Where you've got to be registered in the UK for VAT, even if all of your goods are, only £100 and below the thresholds. Really important points if this is relevant, because you're about to be out of time. If you have goods in the UK and you want to sell them in Europe, or you have goods in Europe and you want to sell them in the UK, you need to move them now, right now, because otherwise you're going to get duty. Simple as, from 1st of January. That's, there's lots of people sitting on stock and thinking, oh, what do I need to do? You need to ring up. All these logistics firms are going bananas at the moment, shipping these things back and forward across the border. So you need to get your goods where you need them and think about that. The good news is that, again, the UK has released all its tariffs further to the 1st of January. So you can look them up here. Almost everybody's tariffs are coming down, not by much, maybe 1% or something. So the UK is already, so the tariffs across Europe, that's what the custom union is standardized. So there's one tariff across Europe. If you sell, I don't know, bicycle parts, it's 8%, I think it is, or if you sell whatever. So that's harmonized across Europe. The UK has said, here are our tariffs for goods coming from non-EU countries, so what's called third countries. So if you ship a good from Australia to the UK post 1st of January, the tariff on bicycle parts will no longer be 8%, it will be 7%. So remembering that duty, you get VAT and duty whenever you import, if there's duty. And duty is quite a political matter. Duty is about, protectionism and increasing the costs of foreigner being able to sell stuff. A sadness of the joining of Europe, certainly from the UK, Australian and UK Commonwealth relationship, was that the tariffs were much more set about what France and Germany wanted and protecting, their agriculture and things like this than they were about what UK wanted. We stopped buying New Zealand butter or whatever, or Australian meat, and we started having to buy European because there were no tariffs in Europe, and we now had European tariffs because the Europeans don't really have a relationship with Australia and New Zealand. So the good news, the good news for Brexit is that after the 1st of January, these tariffs are coming down. And that includes China. If you want to ship goods into the UK and they're coming from China, wait till after the 1st of January. Almost always the tariffs coming down. So this is kind of the conclusion, I guess, which is, the UK, obviously great e-commerce market. It's very much at the forefront. The logistics of the UK is very small, unlike places like Australia. So logistics is never the issue. As I always say, worst case scenario in the UK, you can drive the product there that night. It takes nowhere, 7 hours is about the most you can drive toe to toe in the UK. So people stick their logistics hub in the middle of the UK and everyone can get things delivered the same day or in the morning. So e-commerce has really exploded in the UK. Now, effectively, by leaving this club in Europe, we can join others effectively. And, the Australian-UK trade deal should happen. And I would expect duties to pretty much disappear like they used to, UK to Australia to the UK, or Australia, either way round. So this could be huge, really. And there is a second opportunity that if and when we get a trade deal with the European Union, which is one of the things that bothers them, you know, the UK from a Commonwealth point of view may be a very logical place to bring your goods into the UK again, because you may be able to get them into the UK without tariffs and then get a favorable tariff moving them from the UK into Europe, if you follow. So there's some interesting stuff going on there. I mean, I put up this picture. This picture is actually from The Economist a couple of weeks ago, talking about America's duty now is to bring these allies together, really against the threat of China and Russia. And I think there's something very real in that. And I just think, you know, you sort of, I mean, you guys will have a different perspective on it, but when you're living on this side of the map, there's been an awful lot of upset, you know, amongst most of my friends, you know, and Londoners about Brexit, and people very upset and people very pro-Europe and stuff. But I think to some extent they've forgotten their history. And I think, you know, in some ways there's a lot of logic to what's happening now in terms of if we can bring these other nations together, you know, and therefore end up with these trading partners. You know, I hope those all come together as trading partners. And I mean, really, The Economist's lead was on it, that Joe Biden's job is to bring that together as a strong union of trade, you know, and of collaboration. So, you know, I hope all that happens. Okay, that's it. So it's slightly political, but that is what's going on at the moment. We're Oury Clark. I had a very long and rather kind introduction, and I'm Andy Oury. So that's it. I hope that was helpful.
Well, thank you very much, Andrew. It's very, very interesting to see the complexities in the connection between the mega trends around e-commerce and also the regulatory environment, and particularly the significance of the 1st of January. So thank you very much. We'll all be watching very closely to see what the new rules are post 1st of January with Brexit, but also we're very interested in the progress with the free trade agreement. Now, we've got a couple of questions that have come through. The first one, somebody's asked, we've heard a lot about consumer goods. Are the same trends being seen for B2B? So maybe, Callum, would you like to comment first?
Yeah, sure. Yeah, so I think, you know, broadly speaking, B2B markets, particularly with digitization, often follow B2C. You know, we see it in like the way that consumers engage with consumer tech, and how that, you know, for example, what I mean by this is the experience we've become used to when we shop or use an iPhone is becoming the experience that we expect when we're using business-to-business software. And so in the same vein, when it comes to selling goods, I think the types of experiences that consumers have come to expect when they're shopping online is becoming the type of experience that businesses also expect when they're shopping online. And it's the buyer's experience that ultimately is the driving force in the market. So when it comes to, say, the shift direct to consumer, ultimately, that's very significant for B2B. Lots of manufacturers and brands who've only ever sold B2B are having to figure out how to address that trend. Where do they fit in that world? When it comes to marketplaces, again, we're seeing more and more B2B marketplaces emerge. So businesses selling to other businesses in a marketplace style environment. Amazon have launched their own B2B marketplace, and there are many other platforms now, marketplaces, many of them built on a software called Miracle, which you may or may not have heard of, that are being established for B2B selling purposes. So direct to consumer, strengthening marketplace, and then the rise of the effortless economy, that final point, that trend, again, consumer expectation is driving business expectation. So more and more businesses will expect to be able to buy goods from other businesses in the same way as they would if they were a consumer. So I think all the trends are there, they're relevant, they're the same for B2B, they're probably just lagging. So I think it's healthy to look at the consumer market dynamics and use those to point us to where the business to business market dynamics are heading as well.
Right, thank you very much, Callum. I think the next one is for both Callum and Andrew. So Andrew, I'll ask you to comment first. Given the VAT changes expected for next year in the EU, do you anticipate the larger established online marketplace brands to take on more of the administrative burden and dominate e-commerce traffic?
Well, I guess it's all about that one-stop shop. Once the EU introduces that, then you can have one registration. And I think that there is a really complicated bit about sort of how's the software going to handle that? But the software companies have just they're just going to have to catch up and sort out their software so that you can effectively sort of get a single registration in Europe and then use the software to keep account of it. So, the big players like the Shopify and stuff. But I think your point's fair that it is really complicated, as no doubt I really tried to keep that simple, but it's such a complicated subject to explain to someone if you haven't been looking at it for years. I mean, regardless of Brexit, it was really complicated beforehand, and not many people have been doing it correctly. But so I think that is right. I think those marketplace rules that are coming along are really trying to put more legal pressure onto the marketplace to say that it is their responsibility. So I think that's right. I think you'll end up like you always get on the internet, such a good aggregator with a couple of big players who are going to have a very slick setup, and they're going to say, look, send us your goods and we'll do the rest, but you're going to pay in margin terms. It's a bit like anything that works like that. They end up really controlling the market and being able to then sort of hike the margins and stuff like that and squeeze the manufacturers. So yeah, I would be mindful of that. But let's stage one will be, do you want the administrative burden at all? Well, probably not. So you probably sell through a marketplace, and let's hope that the competition remains in the marketplaces. There's enough of them so that they don't get too big and then really squeeze the manufacturers, if that makes sense.
Callum, do you have a comment on that question?
Yeah, I think it's an interesting one. I think we'll see different levels of different levels of effort from different marketplaces. Different marketplaces have reputations for how well they treat their sellers, and I think, as with many other issues, that will be reflected in this issue and how they help the seller do the work essentially that the seller effectively may need to do. So I think what the marketplace always seeks to do is to drive a brilliant consumer experience or the buyer experience, because that drives the demand, which then attracts the sellers. So that will always, I think, with the marketplace model, remain their priority. And then so I think they'll make it as frictionless for the buyer as possible. I think in terms of the seller selling through the marketplace, it will depend marketplace to marketplace. And again, even if we look at how some of the marketplaces have operated through the pandemic, it's clear that some have been much, I guess, better partners to their sellers than others, depending on their position in the market and what level of kind of influence they have. So I think there's definitely not kind of a one-size-fits-all approach that will be taken. But broadly speaking, it's in the interest of the marketplaces to ensure that they're able to meet the demand they're creating with supply and making that frictionless. So it's going to be in their interest to an extent to be making that as simple as possible for the sellers.
Yeah, there's another one here for you, Callum. For a Queensland exporter just dipping their toe into e-commerce in the UK for the first time, what approach would you recommend? Starting out with a partial e-commerce approach, then growing to a total approach, or doing the research and groundwork so that they can go straight into total e-commerce?
Yeah, really great question. I think where you would want to get to is you want to, sort of going back to the third slide I sort of laid out, which is ultimately around our software, which is not meant to be the pitch, but you want to be in a position where you have the option to go into different channels quickly. So what we often see is businesses selling online, they might have a website, or they might just be selling on marketplaces, but they can't move quickly enough, all of their back-end operations, to help them to get into different channels. So I think even if you start with a partial commerce kind of approach, where you maybe just pick, say, your website and one marketplace to sell on, what you need to ensure you have is the back-end infrastructure that allows you to start plugging in more and more channels so you can drive revenue growth. Once the model's working, you want to go faster, right, when the opportunity is there. So I think definitely like a partial commerce approach in the short term, in terms of not trying to be everywhere, is a good one. You don't want to dilute your resource and do a bad job in lots of channels. You'd rather do a good job in just a couple of channels. So I'd say a partial commerce approach is a good one to take, but with the view that you need to start and will want to start getting into more channels if you really want to drive revenue growth and stay engaged with your customers. So I think it's a bit of both. And then when it comes to the UK, I think what we see often is the best way to get into the market, potentially, or going into any international market, is often looking at the marketplace channels rather than your first party channel. So I think once you can establish a strong marketplace presence in an international territory, then it's worth establishing your own direct selling channel, i.e. through your website. But a great place to start is to test the market with your products on a platform like an OnBuy, a Frugo, and eBay, and Amazon, and Etsy, wherever you think your type of customer will be shopping. Can you test those channels, demonstrate that there's real demand and appetite for your product? And then once there is, and you can demonstrate that at what will be a lower cost, because going onto those channels is often a lot simpler than establishing the full infrastructure around your website and driving traffic to your website. So once you've started to demonstrate your product market fit, then you can start expanding into more channels and doing total commerce.
Yeah. Okay, thank you. Very interesting. Another question for you, Callum. Given the speed with which we're seeing the whole commerce market move, and you pointed out very clearly how the whole COVID environment has basically catapulted a trend, trends that were already underway. Do you think the whole definition of market saturation is changing? Like, will there be, how do companies wanting to enter markets make some determination about market saturation?
Yeah, it's a really interesting question. I think what we're seeing with e-commerce is that businesses have an opportunity to get bigger faster because they can reach basically more customers. There's more scalability in an e-commerce environment than in a bricks and mortar environment. So that creates, in one sense, a huge opportunity, because you can have a small business, and if you can identify your channels, how you're going to get to market, and how you're going to do the ops in the back end, make that work effectively, you can scale very fast, right? So the market opportunity is far more frictionless. It's global, so there's a lot of opportunity. But the challenge to that is that what we're seeing more of is large players then capture more of the opportunity. So and I think this is the same in almost every industry, is tech enablement means there's much more scalability in markets just generally of businesses. So the ones that go big and get big quickest often become dominant. So I think, the market saturation, like markets are there, markets will evolve and change, new players will come into the market. I don't think it's necessarily saturated, but I think potentially the distribution of, I think a smaller number of businesses will be capturing increasingly larger shares of the global market environment. But at the same time, what we will see, I believe, is the long tail of businesses getting longer, because the barriers to entry to sell online, are far lower than having to establish, a store and everything that you need to do if it's a bricks and mortar store. So I think barriers to entry are lower, opportunity is bigger, but I think we will see sort of consolidation, and the largest players get very big, as we're already watching and seeing in so many different markets around the world.
Thank you. Andrew, just another one for you. As you'd be aware, Australians can't travel outside of Australia at the moment. The borders are very tightly controlled as a result of the pandemic. What's your advice to companies, given some of the things that you've told us about needing to actually have a physical presence to establish companies in the UK and also in across Europe?
Well, sorry, I must not have explained myself very well. You can form a UK company, in hours from your home in Australia. No one needs to come here. No one needs to live here. There's no requirement to come here. I mean, the only thing that you're supposed to do post-COVID is that if you want it to be only taxable in the UK, you need to make sure you're coming here to have sort of board meetings on the whole. So you can VAT register, easily from Australia in the UK. This is not so true in Europe, to put it mildly. You can do it through sort of FedExing things back and forward with Ireland. I think some countries may have changed too. They're trying to do sort of, they've been trying to find a way that they can do notarization and stuff through Zoom, but I'm not aware it's really working yet. But certainly if you want to do business in the UK, you can do it from your living room and go online and form a company very easily. And there's no requirement to come here. You can get bank accounts in the UK now without having any UK directors or UK people. You know, companies like Cash Plus, if you go through the right channels, will assist you and open a bank account for a UK company. So yeah, no requirement to come to the UK, and that hasn't been, to be honest, for quite a long time for the UK. It's become pretty digital like that.
Thank you very much. Well, that brings us to the conclusion of what's been a very informative and stimulating discussion this morning. So a great thank you once again to both Callum and Andrew for your very informative, excellent insights, and I think overall setting the context, what, you know, a unique context that we're sitting within at the moment, which hopefully will be very helpful to those Queensland businesses who are looking to branch out into the UK and into Europe. And the whole reason for holding this seminar today is because our office has experienced unprecedented inquiries from Queensland companies wanting to expand into the UK and also into Europe, and a lot of questions about what does this whole e-commerce environment mean for going forward. So today's seminar has been particularly pertinent. So we'll wrap up today's seminar, and of course e-commerce has just been an enormous area, but certainly the future and overcoming the details will ensure that we're ready to hit the ground in the future. So if any of our participants today have further questions, please get in contact with our office, and we'll connect you with both Callum and Andrew. And of course, if you've got other broad questions about doing business in the UK and in Europe, please be in contact with us. So a good evening to our colleagues in Queensland, Australia, and a good morning to our colleagues in the UK who are just starting their day. We wish you all a wonderful festive season, and hope that everybody can stay safe and well, and we look forward to seeing you in the new year. So thank you very much.